In partnership, a partnership we said is a business that comes in stock data and discipline. In partnership, it's a business that is formed between 2 to 20 people coming together with the aim of making profit. So as soon as profit is made, we need to apportion it based on whatever agreement we have in our partnership deal. So that brings about appropriation account. So in appropriation account, we have different items, such as interest on capital, interest on drawing, salaries of worker, salaries of partners, salary of a partner, and share of profit. So these are what will entail in the partnership account when we are appropriating apportioning each item. So we start with the first one, partnership salaries. Why do we have partnership salary? We have partnership salary because there's an active partner. Who is an active partner? A partner that has contributed money to the business and at the same time work in the business is an active partner. So for the fact that he's working in the business, he deserves what? Salary. So salary will be taken away from the profit because it should be a deduction. One, is it clear? So why do we have to do these deductions or additions? We have to do it so that we don't overstate or understate our profit. So that's about salary. Then we go to interest on capital. Capital is the amount of money contributed by each partner. Yes or no? Good. So if you have contributed this amount into the business, you will be rewarded, which is what? A sort of interest. That is the interest is the reward on capital. So which means you can get more. So what is interest? We say simple interest is principal multiplied by time multiplied by rate over 100. This is interest. So that means you have you've put certain amount of money into the business, and you should get addition of what you have put into the business in form of interest. So maybe if you put $10,000 into the business, you might be given 5% interest. So that means 5% of 10,000 is your interest on capital. So why do they give interest on capital? They give interest on capital to encourage more capital contribution. You know, when you know you're going to have interest on capital as a partner, you want to do more. Yes or no? Good. Then we have share of profit. The aim of the business is to make profit. Yes or no? So as soon as profit is made, we have to share it according to our agreement. Maybe it's 2:1 or 3:2:1. So whatever the agreement is, we have to share the profit according to that. Do you understand what share of profit is? And the last one is interest on drawings. Drawings represent the amount of money taken away from the business. Capital represents the amount of money put into the business. Drawings represent the amount of money taken away from the business. So when you take money away from the business, it does not add up. It reduces, yes or no? So they want to discourage partners from taking money from the business. So when you know that you have to pay interest on whatever you withdraw, you would not want to withdraw. Yes or no? So interest on drawings represent certain amount of money moving out of the business. They don't want that to happen. As a result, whenever you take money from the business, you pay interest on it to discourage withdrawals. Is it clear? Is it clear, please? Great. Now, this is the format for an appropriation account. The profit will have been made, yes or no? So as soon as the profit is made, we have it on record. Then we add interest on drawing, because interest on drawing represents the amount of capital or the amount of money coming into the business. So, it's an income, yes or no? So you add it to the profit. So if partner A, like this is an appropriation account for partner A, B, C, we don't have a name, we use A, B, C. So partner A has withdrawn certain amount of money, is paying interest. Partner B, 2, and C. So the total amount of interest paid on drawings will be added to the profit. Is it clear? Yes. That is adding interest on drawings. Then salary. Salary represents an expenditure for the business. Yes or no? So you have to, salary represents expenditure. Yes or no? Yes. Great. So that means you have to pay that. So paying it means you have to take it away from the profit. Less salary. If it's an active partner, just partner B that is active, then you give the partner B salary. Is it clear? Is it clear, please? For partner B. Then, interest. Less interest on capital. Capital is the amount of money paid by the business, yes or no? Yes. So, the amount of money contributed by the business by partners to the business. So, if you have contributed capital into the business and you need to get interest, interest represents expenditure, yes or no? Yes. Interest and expenses, right? So, you have to less it from it again. Is it clear? So, You less interest on capital, you less salary, you had interest on drawings. At the end of it, you less it away from, you take it away from your profit. That is the total. So this is the total profit left. The total profit left is what you have to share as partners. So with your ratio, maybe it's 3:2:1. So if the total profit is x, then the share of profit will be, we must end up with x. That means partner A will got his own, B and C. If it is lost, they have to share it the same way. So this is what we call appropriation account. Is it clear now? Any question about it?